Welcome to the Freedom and Prosperity Podcast with your host, Desi Arnaz. Join us as we explore the journeys of top achievers who share strategies and stories about their success and living life on their own terms. Get ready to be inspired.
Well, hello, guys, and welcome to today's episode of the Freedom and Prosperity Podcast. I am Desi Arnaz, your host, and I'm excited to be spending some time with you guys again today and introducing you to my next guest. He's a gentleman that's very well accomplished in the real estate and in the entrepreneurial space. He's also an author, a podcast host, and he's got credentials, very impressive credentials. Just let me put it that way. Okay. And so you guys are going to be able to learn a lot from this gentleman today. Hopefully you will listen and gain some real value here. His name is Lane Kawaoka, and I want to welcome you in today, Lane. Welcome to the Freedom and Prosperity Podcast.
Yeah, thanks for having me. Aloha, everybody.
Aloha. That's right. You're in Hawaii. I love it. I love it. I was just there about a year or so ago. We took a cruise and we hit, I think, 3 or 4 islands during that cruise. It was really nice.
Oh, cool. Cool. Yeah, I think I know which one you're talking about. A lot of time at sea.
Yes, a lot of time at sea. It was
Yeah.
5 days out, and I think 4 days hitting islands, and then 5 days back, something like that.
Yeah.
And but it
Well,
gave me a chance to visit the various islands. Now, when I go back, I'll just fly out and go to the ones that I like best.
yeah. Yeah. Well, it must have been good you didn't fly back and you cut the second leg.
That's right. That's right. Yeah, it was good. It was a good trip. Well, welcome in, my friend. I'm glad that you're here. So I know that you have been in the real estate game for a long time and in the entrepreneurial game for a long time. And so just to give our audience a little bit of context, would you mind sharing a little bit about your background and kind of what got you here, and then we can go from there?
Yeah, so originally started out as an engineer. I was kind of brought up in one of these families where we're taught to go to school, study hard, get a white collar professional job, um, not waste your money on frivolous things, don't get into credit card debt, and then also do the 401k stuff, and also buy a house to live in, right?
Mm-hmm.
So I graduated college with an engineering degree back in 2007 and started to work for the man, made good money doing it.
Yeah.
Was able to save 80 grand, 20% down payment on my first house to live in. And, I with real estate, it's great if you got money. And I had a decent amount of money starting out, right? I
Mm-hmm.
wasn't, I namely call myself a first generation multimillionaire is kind of our group these days.
Mm-hmm.
But, just again, follow that linear path of doing what we're told. And here I had this big house to myself in my early 20s, and I was traveling all over for work because I was a construction supervisor and I was, living in hotel to hotel. So I didn't have a family, I wasn't married. So I was just like, well, let me just rent this thing out and make more money.
Yeah.
And that's where I started to get the taste of cash flow and rental real estate. The rents were like $2,200 a month. The mortgage was $1,600 a month. So like for a young 20-something-year-old kid, that was a lot of beer money
Yeah.
every month. And then I learned about, the tax benefits, save a lot of money on the taxes, depreciation that you get, the the appreciation on the property, and the big thing that is the huge difference maker between you buying your own house and paying down your mortgage is your tenants pay down your mortgage for you, and you get that equity build up that way. So when you add up the 4 ways you make money with real estate, it was like, why the heck would I want to put my money in that 401k stuff that
Yeah.
they brought the company representative in and to brainwash and talk to us that one day,
Yeah.
And that was kind of where it all started. Fast forward a few years, 2015, I had 11 rental properties. Started to buy in more cash flowing red states.
Mm-hmm.
And then from there on off, started to invest in apartment syndication, and here we are today.
Okay, apartment syndications. Wow, that's a whole nother level of landlording, right? So to speak. That's a whole nother level. So what, for those listeners that are not familiar with that term, what does that actually mean?
Yeah, I'll break down the word syndication. So the analogy I like to use is like an airplane. In an airplane, you have the cockpit, where you have your general partners, operator sponsors, whatever you want to call them. But the guys running the deal, who find the deal, get the lending in their name, make distributions, run the asset, tell the property manager what to do. These are the guys who fly the airplane. And in
Okay.
coach, the guys in the cockpit, these are the general partners, GP. And in coach, you have the limited partners, the LP, and people who just, pay to get on the plane, and then it becomes this cool construct of partnership, right? Everybody
Okay.
wants the plane not to crash, because if it does, everybody goes down with it, general partnership included. But this is where you bring in capital from just seemingly regular accredited investors, and now allows investors to get access directly to these high quality institutional assets. Whereas, for most people out there, the only way they can access investing in a apartment building or a self-storage facility, or these big commercial assets, is through a REIT or a stock,
Yeah.
right? But the
Yeah.
problem there is you pay so much money in all these middleman costs and sort of financial planner fees, right? Like, that's what I never really understood, why people did it that way, but that was the only way that you were able to access these high quality assets. But when you syndicate these deals in a smaller group, kind of more grassroots in a way, you obviously have to follow a lot of SEC rules and regulations, but now it gives people direct access and essentially cuts out the middlemen on these investments. But this is where, like you said, you use the word like different levels to it. Like in my book, The Wealth Elevator, I kind of define these different levels to wealth building. I think when I first started, I in the book, there's a diagram with all this stuff. I started on the first floor of the wealth elevator, and this is where you're not broke, you got some money, but you're not yet an accredited investor. Your net worth isn't quite $1 million net worth. And that was kind of where I started just buying little rental properties on my own from 2009 to 2015. And once I became more of an accredited investor, then I started to get access to these larger syndicated commercial assets. But I think, everybody needs to recognize where they are in the wealth elevator construct and kind of tailor their strategy to where it's at.
I like that title, by the way, The Wealth Elevator, because you're literally going up floor by floor by floor, huh? So this is a book that you said that you've written?
Yeah, it's on Amazon. We released it this past year. I think there's a lot of books written out there for regular people, in credit card debt, trying to get, unstuck. And, like the Dave Ramsey books, Susie Orman.
Sure.
I think they got great information, but I wanted to write a book, people more on that first floor, the step up and the next step up, and then to kind of depict what happens after that. And a lot of this stuff that I had to kind of piece together on my own. When I had 11 rental properties, I kind of thought I was hot stuff. I mean, who in their late 20s, early 30s that doesn't own a few rental properties doesn't. But then I realized I by interacting with other accredited investors, and I started to realize, wow, there's a system to this, and there's more best practices that you never hear about. You don't read about this in books or podcasts.
Right.
And, this is all new to me because I didn't have, a rich uncle. My parents never owned rental real estate. I didn't know any accredited investors growing up. But as I started to rub shoulders with a lot of peer accredited investors through all these circles, what I started to realize is there was a very consistent amount of best practices, in particular surrounding investing in alternative investments off of Wall Street. Here, you got a lot of good tax benefits, in particular investing in real estate. Like I mentioned before, the depreciation, and when you're able to do cost segregations and get bonus depreciation, it augments that even further. And then I think some people have maybe heard about infinite banking, right? Is kind of that trifecta of strategies.
Yeah.
And I was like, this is it, right? This is what I keep hearing from everybody, and different data points. And what I realized, like, well, why doesn't everybody do this, right? But then I realized, well, this is the complete opposite of what my parents taught me.
Yeah.
And I think that's difficult, is like when you're around regular people that are sort of brainwashed to invest in the 401k system and all those ETFs and mutual funds, you sort of put faith in, those big companies, and you don't kind of think for yourself. And unfortunately, you have to sort of get off the beaten path, and you have to find a tribe. And this is why we do a lot of events where, we pull people together who think independently and have some intention behind their investing and building
Okay.
wealth.
So you guys do that.
Yeah, if not, you fill your head with a bunch of good ideas and, stuff that makes a lot of sense, right? Why would I want to put my money in Wall Street investments that, have super high hidden fees and
Yeah.
barely make any money?
Yeah.
But if you don't have the people around you doing it, then it all kind of, just goes up in the sky and comes back to earth. You really need to have that proof of concept in a way. And that was critical for me getting
Hmm.
started. I saw other people that were maybe a decade or two older than myself, high net worth business owners, doctors, dentists, lawyers,
Hmm.
engineers, a lot of engineers, investors. And they kind of did exactly what I did, bought a bunch of rental properties, and then sold them off. And when they became more of an accredited investor, kind of jumped into these syndicated private offerings. And, this is sort of where I was like, wow, it's possible,
Yeah.
And part of it's like, you don't need to be a genius to do this stuff. It's very repeatable by the
Yeah.
average person. But again, very opposite than we're all taught.
Yeah. They don't teach us that. And the funny thing is, even though I was in the real estate business for the longest time and an investor, I was pretty old by the time I finally figured out what you figured out at a much younger age. I was well over 60 when I finally said, wait a minute, there is a better way. There is a system out here. And I literally got rid of my IRA. I didn't have a 401k. I had an IRA. I shut it down. I did set up the infinite banking system for myself because I believe that that really does make a lot of sense when you look into it. And then and like you, I started saying, okay, what can I do to really help myself and help others, by doing some things together. Yeah, I love the analogy that you used today, Lane, when you said it's like an airplane where, you got the pilot and the other people that are flying that plane, they're running it, and then you got everyone sitting in back in the plane itself and just kind of going along for the ride. It's a great analogy, right? And it's in everybody's best interest, as you said, for that plane not to crash. Good analogy. Thank
Yeah.
you for
I mean,
sharing that.
you have some times where you don't work with the best people, right? And certainly
Sure.
we've kind of run into our fair share of that as anybody else, is when you work with operators that are under, quarter billion, $500 million of assets. But, I think that's where like a network of other investors is so much more critical. And, I think more and more these days we start to see investors over the age of 50 in our group doing exactly what you mentioned, right? Like a couple of decades prudently putting money into your qualified
Hmm.
retirement plan. And then, but then when you realize it's like, wait a minute, why would I want to put my money into that system where in my earning years I'm making less money, I'm in a lower tax bracket, but then at the end I'll be kind of swimming in a higher tax bracket. Like
Yes.
it kind of was like, oh geez, I got screwed, right? I mean, now everybody is look, everybody, I'm not giving a personal finance,
Right. Right.
advice. If not, I apparently would have to charge you because that's what certified financial planners do. But it's like everybody needs to think for themselves because, to their, the Wall Street mentality way, when the average person out there makes a lot less money in their older years, right? Because
Right.
they didn't have saved any money. But that's the opposite from our clients, right? Which is why they're in a higher tax bracket in the future. So, it's just like there's kind of a edge to all these ideas and best practice. Like for example, buying a house to live in. For most people, it makes sense to buy a house to live in because it is sort of a forced piggy bank, right? We all
Sure.
have that nephew that is horrible with their money, and if they just had to pay the mortgage to keep a roof over their head, that'd be the best thing for that guy, right?
Yeah.
If
Yeah.
not, he just blow the money on a
Yeah.
monthly basis. But for people in our community who are good savers, they probably should take that money and go on the offense and make better returns elsewhere than just sinking it into paying off their house, which by the end of the amortization period, you're barely getting low single digit ROI on that thing.
Yeah, you're right. And I discovered that as well, again, later in life. And after I became a high net worth individual and an accredited investor, and I started talking to others, I was surprised at how many of us, and myself included, even though I own a bunch of real estate and other investment assets, I don't own the house that I live in. It's kind of like, okay, I get it, but at the same time, I get why people should own. And in my own family, I have a couple of my kids. I have 4 kids, right? Two of them I think should own their own home because that's about the best they're going to get and going to do. But then there's two that are really very good with money. They have learned how to invest. They have learned from me and from others the better way to live their life. And frankly, they don't own now, as far as not the residence, but yet they have plenty of equity in real property and also in other asset classes, you know. So I agree with you 100%.
Yeah, yeah.
Yeah.
I mean, there's different trains of thought, right? And I think the important thing is like, just like when you teach kids how to do things, like the why behind things, right? So they
Yeah.
can understand the dynamics of any closed system and make the best decision for their own selves.
Yeah.
And in my book, we even talk about getting past the third floor of the wealth elevator, which is typically past 4 to 5 million net worth.
Okay.
You essentially got your stuff in order at that point and you're in kind of
Yeah.
cruise control. There are some, ideals out there when you get to that level that you pay for things that make you money, assets with debt, but your house is not an asset, or your cars or things like that, and you pay for those, pleasures in life. They're, you fully call what they are as pleasures in life
Mm-hmm.
with no debt,
Mm-hmm.
and so those are kind of some of the more concepts at the higher levels of the wealth elevator, that we kind of talk about in the book. But I think what I wanted to do in the wealth elevator was kind of depict these different stages. Now, if your net worth is under $100,000, a lot of the things even on the second floor of the wealth elevator do not apply. And, maybe it's good to read the book, but just know where these things are in place. And, I think
Mm-hmm.
the feedback that I've gotten from people reading it is they're like, you get a lot of this, like, you spend too much time on TikTok and YouTube shorts, you typically go brain dead, or what I tell my daughter, your brain rot.
Yes.
There's some of the things are good, right? Like, some, teaches you how to do like cut fruit certain cool ways, and
Sure.
like
Sure.
even money financial tips, right? It's some good ideas, different ways to think about it. But the key is, like they say, like the dosage, right? Or when do you apply that to particular idea or tip?
Mm-hmm.
I think that's just like anything, just, I think at what point in your wealth building journey, and everything I put in the book is things I've experienced myself. Going through graduating college, starting a job, saving $20,000-$30,000 a year in the beginning, and just putting it away to down payments on rental properties,
Mm-hmm.
and then becoming more of an accredited investor and kind of going from that first floor to the second floor of the wealth elevator after that. There's a kind of a not a clear defined path that I took, since I kind of bounced around a little bit.
Yeah.
But in the wealth elevator is this ideal of, there's different floors to the wealth building journey, and certain things apply at certain places and don't at others.
Well, as you said, you didn't have mentorship from within your family, so you're going to be that person who is mentoring moving forward and hopefully some people that you're leading or at least offering to lead will be open to follow, you know. Um, it's interesting. In my own family, not just my children, but just in my family in general, I've discovered that many of them don't really take advantage of me the way I wish they would. I don't know any other way to say that. But it's like I have resources here, guys, that I can really help you guys with, you know. Um, and I let them know all the time that, I'm an open book for my family. They don't have to pay me. They don't have to join my classes or anything like that. Just talk to me. But yet I see them not doing that. And some of them, I see them make some financial mistakes, certainly do some things that, my 72 years on this earth have taught me, it's not a good idea. It's probably not going to work out well for you doing that. But I don't also impose my opinions without being asked, you know?
Yeah. Yeah.
Yeah,
I mean,
I don't.
what's the saying, when the student is ready, the teacher appears. And this is
Yes.
something that's come out of our in-person retreats. You know, some, I always think of like parenting is a lot of luck in it. Doesn't matter if a kid is, sometimes they just don't really care about money.
Yeah.
I think all us in our community, we're very attuned to money and we enjoy the ideas of budgeting, saving, investing, but
Hmm.
it's not everybody's cup of tea. And I think you have to have an interest to it. So there's always discussions of, if you have two or three kids, who is the the successor of the
Right.
group, right? But
Right.
like that's kind of the idea. I mean, even like especially like spouses, right? Like many times the spouse is just not really super interested in the money side of it or the investing side.
Right.
So as much as I think people in our group are very attuned to investing, being very intentional and almost like driving without the cruise control on or autopilot off.
Yeah.
Um, we have to think that we may never know when we are leaving this planet unexpectedly or unfortunately, and
Mhm.
we need to kind of build things in an architecture where at any point the spouse could take over.
Yeah.
So we give. I think on my website I have some kind of like a family emergency binder where you can write in. It's a spreadsheet where you can write in where all your stuff is at, and
Wow.
good discussion material. But I guess going back to what you're originally saying, like it's not, if people aren't interested in it, don't force them. And then I also kind of joke around sometimes. It's like, well, nothing, when nothing really makes them more interested when you start to buy that red Ferrari, right? I'm not
I
saying to
know.
buy the stupid red Ferrari. It's just a stupid car, right? But for some people, success leaves clues, right?
Yeah. For some people, that's what they need to see. Then they feel like, oh, I guess I should listen to you. Oh boy, you know. But I find it kind of interesting because I'm not a red Ferrari or that kind of guy anyway. I'm not that flash guy, you know. And I've had conversations with family members and with students as well, and they just really are intrigued by the flash. And I said, not everybody that has these flashy cars actually own these things. Some of them are up to their eyeballs in debt, and one hiccup, and that car goes on the back of a tow truck, and it's it's out of there. That should not be the measure of a person's success, in my opinion. But I get it. Most people aren't going to open up and show you their checkbook or their portfolio. So what else you got other than what is physically manifested there? I get that. You
Yeah.
mentioned your group and your website. Tell me about that, and what kind of group do you have, and how can people reach out to you to maybe connect with your group?
Yeah. So, we do in-person events because I do think that our group is, always been wandering for a group like this, right? First of all, you have to be an accredited investor, right? So net worth of 1 million or greater.
Hmm.
And typically that means that you've been, really good with your money, right? We typically have more first generation, so second generation, third generation is like your parents gave it you the money,
Hmm.
right? That's kind of the joke is like, how do
Yeah.
you start what you get $5 million is a good way to start with 10, right? No, none of those, none of
Yeah,
that
right.
type. Yeah.
Started with 10. Yeah,
Yeah,
I
left
get
with
you.
five. Yeah, so none of those, right? But the people who like judiciously grew their, invested and save, a lot of it is saving. But we where I started I started the podcast back in 2016. At that time, I would help people buy little rental properties as
Mhm.
I was doing. Again, I don't really tell people what to do and things I haven't experienced myself.
Mhm.
So in the website, there's also some material for people on that first floor of the wealth elevator getting started buying little rental properties. There's like a free course there. But these days, our core group is mostly accredited investors, first generation
Okay.
multimillionaires.
All right. And do you guys have periodic meetings online, or is it all live events?
We do online stuff, but I think the key thing is, we do at least one in-person retreat a year that really
That's beautiful.
solidifies. But people are busy, a lot of people have kids, and
Sure.
it's not definitely would not have time for a quarterly thing.
Yeah.
Yeah.
No, that's beautiful. And what's the name of your podcast?
The wealth elevator. Yeah.
Oh, okay. Good. I love your branding. It's simple. Once I
Yeah.
get it, I got it. I can
Yeah.
find anything. The Wealth Elevator is also your website, right? Thewealthelevator.com.
Correct.
And your podcast is The Wealth Elevator. And your book is The Wealth Elevator. I think we got the picture here, Lane.
Just Google it. Yeah.
Yeah. That's beautiful. That's beautiful. Well, I tell you what, I do know this. I know that your story is very inspirational, just from what I've heard of it. And it shows people that, you don't have to be born with a silver spoon in your mouth to be able to achieve really high levels of success. According to my notes here, you've raised quite a bit of money um, for investing by partnering with people, as you said, like in your airplane analogy that you gave earlier. That's excellent. And you guys have purchased more than 10,000 units, apartment units. Is that correct?
Yeah, that's correct. I
Wow,
mean,
that's
yeah,
serious.
over 2 billion of past acquisitions.
Wow. That's serious. And now you guys are also purchasing small businesses. Is that correct?
Yeah, I think if people have heard like the acronym SWOT analysis, SWOT stands for strengths, weaknesses,
Hmm.
opportunity, threats.
Hmm.
It's kind of a good construct. I know we had a lot of entrepreneurs listening, but you always take inventory of the current state of the market, and even though you may be a total um, gunslinger in terms of business, right? Like some thought needs to be put into if you're going into a hailstorm, right? Or from 2010 to 2022, there was a nice little trade win to everybody's back in real estate. Interest
Hmm.
rates were pretty much nothing.
Hmm.
Then it shot up 40-year highs, or quickest time in history, and it's still elevated, and it's probably going to be elevated. If people want the best guess on where interest rates are going to be at, they can Google the Chatham Financial Curve or CME Financial. Those are the rate cap providers out there that have skin in the game, and they have
Okay.
some curves and projections, and they all say that the interest rates are probably going to be higher for a lot longer. And real estate really, really is impacted by interest rates. So
Yeah.
something, we're more on the commercial real estate side. I think the residential real estate side is a little bit different dynamics to that world, which I'm not really a part of. But I think the way we see it is it's hard to just it's getting harder and harder, right, to find yield and alpha. Like when I first started to buy little rental properties in 2000, I think I went to Birmingham in 2012. I remember buying it for 80 grand that rented for $900 a month in a true B plus B location.
Hmm.
Today, that same property is like 140 grand and it rents for pretty much the same thing.
Same
And the
rent.
numbers don't work, right?
Yeah.
No bueno, it doesn't even work. You're not going
Yeah.
to cash flow with that. I mean, you can
Yeah.
download our analyzer for free on our website and it ain't going to work.
Yeah.
Um, so it's like this idea where, all right, well, you got to unfortunately take on a little bit more risk or do more value add to the asset. And you can do value add to apartments, you can do value add to businesses. So that's kind of where, we've kind of had to expand the different lobster traps out there to catch more
Hmm.
lobsters.
Hmm. Sure. Sure. You know, we have to pivot. We have to be wise enough to pivot. And that's why you want a good pilot in the cockpit, right? That's why you want that. You can see the storm clouds forming over here, and they can make adjustments as needed. And so you guys pivoting and taking a look and saying, okay, let's take a look at this other option because it's still in our wheelhouse. It's still, as you just said, you know, we still have to do the value add, which is what we do. So let's look and see what other options we have available for us in that space. And by analyzing your strengths and your weaknesses, your SWOT. So good job. Good for you guys.
Yeah.
I
Maybe
love
not,
it.
maybe get out of the airplane. I mean, even though we've been used to acquiring apartments, get out of the airplane and switch to the boat, you know?
Oh, whatever is required. There you go. Yeah, that's a good one. Yeah. So I love that. I love that. So as we wind down here right now for our podcast, are there any books that you would recommend for people that are out there maybe considering getting into, let's just say for most folks, it's going to be the real estate game. You know, they're not going to be buying businesses just yet. But what books have impacted your life and that you might recommend to people?
Yeah, so I mean, I never was a house flipper or wholesaler. I don't really
Yeah.
know, I was more just get your 20% down payment. I know people talk about no money down, but yeah, just not the game that we play, right? Um, with that said, I always like the book Millionaire Real Estate Investor by Gary Keller, right? Is
Oh,
for a lot
yeah.
of good fundamentals on, what markets to buy,
Hmm.
things like that, a lot of the fundamentals. Obviously then, how does that overlay on top of the big picture, which is my book, The Wealth Elevator.
Hmm.
Um, but yeah, I think
That's a good book.
that would be a
I've
good
read it.
two couple primers on real estate, and then maybe a tax book to understand the tax benefits
Yeah.
of it. But I think when you get down that road, especially like the taxes or the infinite banking side, there's some people like to examine the roots on the tree, and to some extent, it's just like just pick the damn fruit, right? Eat the fruit, just do it. And in particular, what I'm saying, for taxes and infinite banking, just work with the right licensed
Yeah.
professionals, right? I
Yeah.
mean, if people need a referral to a CPA that we've referred to in the past, or like, just let us know.
Yeah, I'm with you. It's just people out there that are excellent at that. And I don't care how much studying that you do, you won't be as good as they are at it. This is what they do. This is who they are. So I'm a big believer in letting people do what they do and I do what I do, you know.
Yeah.
And that has really helped me throughout my life as a business entrepreneur and investor. So great advice from you, Lane, and I appreciate that. Um, and I'm just going to say to you guys out here, I want you guys to head on over to Lane's website, thewealthelevator.com, thewealthelevator.com. And you can find Lane on there. He's got lots of resources for you if you're just getting started or even if you're seasoned, is a place that you can go. And at some point, you will be on the third floor of the wealth elevator and the fourth floor and so forth. And at that point too, if you're not already there, you can join Lane's group, right, of accredited investors, and you can basically jump into his plane or his boat, his yacht, whatever they happen to be, whatever vehicle they're using at that point. You guys
Yeah.
can jump right in there and just sail with them and trust their expertise. Let them do what they do, okay, which is really critical. And stop trying to do everything yourself. It's far better to let other people do what they do and you do what you do. So Lane, I want to thank you for joining us here today. Is there any last thoughts that you might want to share as I wind down our episode today?
No, maybe just dovetailing, what you were saying earlier. Some people, they like to analyze everything, they like to do everything, but sometimes that can be synonymous with like just procrastination,
Yes.
right? At the end of the day, you
Yeah.
got to make a call. You got to shoot the ball, right?
Yes.
Um,
Yes.
that's by over analyzing the routes. It's a great way if you wanted to procrastinate or delay, you
Yeah, it
actually
makes you
take in
feel
the game
productive.
winning. Yeah, it makes you feel productive.
when really you're not. So
And yeah, and a lot of times people chase that feeling of feeling productive, so they read books and read books and read books. I would say you got to get around the right ecosystem and, just understand the major concepts and then kind of just learn by doing.
yeah, learn by doing. And when you're, like you said, when you're in the right environment, it empowers you too. And you'll know that you're there, by the way. You'll know it in your, as my guest yesterday said on the podcast, she said she's a psychotherapist. She said your gut is your second brain. Okay. So she said you'll know when it's right and you'll also know when it's wrong, but just most people don't listen to that second brain. And you're saying stop with the analysis paralysis stuff. Let's just go, right? Get the big picture, get around good people, and let's move forward. So thank you for that, Lane. So, guys, I want to thank you all for joining us today on today's episode. I want to encourage you guys, head on over to thewealthelevator.com. Get the book too. I'm going to definitely go to Amazon and buy the book and read it because it sounds intriguing to me. And I'm going to see if I can find out where I am on your elevator.
Yeah. Yeah. And yeah, if people pick it up and they leave a nice review, they can email team@thewealthelevator.com and we'll hook them up with the PDF and the MP3
Beautiful.
version too.
So it's team, TEAM, at thewealthelevator.com. That's the email. Okay, very good. I'm going to write that down here because we're going to put that into the show notes. Okay. For the people for those of you that are watching, you'll see team@thewealthelevator.com in the show notes. Well, you guys pass this episode on to your friends. Like it, share it, do all the stuff that you do with social media. But most importantly, implement, get moving, start doing something, right? So I'm just going to wrap this up by saying, listen, guys, God bless you. God bless your family, and God bless America.
Thanks for tuning in to the Freedom and Prosperity Podcast with Desi Arnaz. Want to share your success story with our audience? Head over to freedomandprosperitypodcast.com/guest and apply to be our next guest.